Hey guys, so in this video, we are going to go over how you can start investing in index funds, specifically with Vanguard, which is one of my favorite brokerages out there. I'll walk you through setting up a free Vanguard account, some of the best index funds that you can buy today, as well as how this simple strategy will make you a guaranteed millionaire. No, like seriously guys, I'm calling it. If you're under 30 and you start prioritizing investing like this, you will become a millionaire by the time you retire. It's so simple, but sometimes these simple things are the hardest to do. So there's a certain amount of interchangeability between index funds, mutual funds, and ETFs. An index fund is a type of mutual fund that is tracking a market index. So this could be something like the S&P 500. Now, when you're investing in index funds, you're basically investing in all these companies that are included in that particular index that it is tracking. There's a fund manager whose job is to make sure that the fund is performing the same as the actual index. So for example, if the S&P 500 is up 10% for the year, then the index fund or mutual fund that is tracking the S&P 500 also better be up 10%. Now, when you invest in mutual funds, you are putting in X amount of dollars into the fund, and then they are investing that money for you. With an ETF, there are similarities in terms of what companies you're investing in, but the way that they are traded is much different. ETFs are like shares that you can buy. You can buy a share of an ETF just like a share of Apple or Tesla, and you can buy or sell whenever the market is open. We'll be focusing on ETFs in this video because they have a lower minimum investment and they are much easier to buy and sell, in my opinion. Okay, so let's talk about how to set up your Vanguard account. I recommend this brokerage for beginners and advanced traders because they have commission-free trades, high quality funds with low expense ratios, and great customer service. In particular, 95% of you will qualify for a Roth IRA account. And this is the retirement account that I urge you to start contributing to if your income is under $139,000 per year. Now, if you make more, sign up for a traditional IRA. So now we'll go through the steps for you to actually set up your own Vanguard account. So here I have pulled up the Vanguard homepage, vanguard.com, and what you're gonna do is you're gonna click on Personal Investors. And from here, you're gonna go to the bottom of the screen, and right here, you're gonna click Open an Account. So depending on what you're trying to do, you can either open up a brand new account or you can move an account or assets into Vanguard. If you have not set up a Roth IRA yet, then you'll probably just click Open a New Account. And if you're trying to roll assets from your other IRA or brokerage account or 401k into this account, then you will click on the right one. So let's just go through and click Open a New Account for this demo. Now that's gonna ask you, how will you fund this new account? And this is basically asking you where you're going to get the money to put that initial deposit into your account. You can choose electronic bank transfer or another Vanguard account. You can choose rollover from an employer plan, or you can choose transfer investments from another financial firm. We'll click on this one for now and click continue. So do you already have a login? No, I'm new here. So you click this one. Now it's going to say, are you registered on Vanguard.com? If you haven't used Vanguard.com before, then you won't have an account, and you'll click no, and you will actually fill out an online application. So it says things you'll need: the routing and your account number, as well as your current employer's name and address. So the first thing it's going to ask is choose your account type, and basically you're going to choose either IRA, it can be a general savings account, an education account, a 401k, all that stuff. If you don't have any retirement accounts yet, I definitely recommend go with the Roth IRA. You have to be making under $139,000 per year to qualify for the Roth IRA, but if you do make more than that, then you can go with the traditional IRA. Second step is to actually complete the online application, and this is gonna take like 5 or 10 minutes. And then within 1 or 2 days, you will get a confirmation saying that your account is funded and that your account is ready to access. So I'm gonna click continue, and here we're gonna say retirement. We're gonna go with Roth IRA. And then what's your goal for this money? I'm gonna click, let's say growth, right? It doesn't really matter what you put here. Income. Source of funds, I'm just gonna say general savings. Okay. I'm gonna go with a fake birthday. All right, now it says to open your brokerage account, you're required to obtain the following info about your employment status and association. So whatever you are, you can be employed, let's just say employed. And then it'll have you fill out this stuff, your employer name, and then ask you some other questions here. Now, I'm not going to go into the full details on establishing an account because I'll have to put it in my bank account info and all that stuff, and I already have an account. But it's pretty simple. It's very straightforward. Just go through these 5 steps and you should be good to go. So now that we have the account set up and the initial funds are transferred in, things are looking good. Except for when you realize that just because the money is in your account doesn't mean it's actually invested. So this is a huge mistake that a lot of people make. I made this mistake myself where I put the money into the account and I just assumed that it was invested. Nope, it's just sitting there in your settlement or money market account making $0. So to handle that, you actually need to take that money from your account and use it to buy investments. So I'm here in my own Vanguard account, and what you do is you go to buy and sell. Here you have 3 options. You can invest with Vanguard mutual funds, you can trade ETFs or stocks, or you can actually just use this to transfer money to and from your Vanguard settlement account. So since this video is about Vanguard and buying Vanguard index funds, we're gonna select trade ETFs or stocks. From here, it's gonna have your account type. So you can see that here I have my Roth IRA brokerage account. You're gonna select transaction type and you can select buy or sell. So we're gonna try and buy something. So I'll click buy. And then you put the symbol of whatever stock you want to buy. So let's say I want to buy VOO. I'm gonna click get quote. This is Vanguard's own S&P 500 ETF, which I will definitely recommend you guys check out. So currently it's trading for $311.10. What I'm gonna do is I'm gonna click how many shares I want to buy. So let's say I wanna buy like 5 shares. I'm gonna select order type, market, limit, stop, or stop limit. And if you guys don't know what these are, I would just say go with market. But if you want to know what each of these is, just do a quick Google search. It should make a lot of sense. So I'll click market for now. And then what you do is you click continue. And then you click submit to actually purchase it. Doing this gets the money from your settlement account into actual investments. So after I click submit, I will then own 5 shares of VOO, and that hopefully will grow in my retirement account until I retire and pull that money out tax-free. So let's talk about why ETFs are so good, and we'll just look at Vanguard's own page about ETFs. So basically what they are saying is that investing in ETFs, it's combining the diversification of mutual funds with lower investment minimums and real-time pricing. That just basically means you can buy and sell ETFs whenever you want when the market is open. So it is more flexible than mutual funds. So now let's talk about why ETFs might be better than just buying individual stocks. Well, the first thing is definitely because of less risk. When you're investing in an ETF, it's much less risky because it's such a diversified investment. One single company could do really well or it could do really badly and you could lose all your money. However, when you're investing in the market as a whole, there's a good chance that in the long term, it will do quite well. Another really great thing about just buying ETFs is that it's a lot less work. You don't have to do any research because you're leaving the actual selection of stocks up to an index or to some manager. So now let's take a look at all the ETFs that Vanguard has to offer. You can see that there are 75 ETFs on their website, and basically they come in different categories. So we have US bond ETFs, we have US stock ETFs, and that's divided into large cap, mid cap, and small cap. We have international bond ETFs, we have international stock ETFs, and finally we also have sector and specialty ETFs. So basically whatever sector or industry you want to invest in, you can find an ETF that correlates with it. Now, for most investors, I actually recommend just going with a US stock ETF. Vanguard has a bunch of really great ones that all have very low expense ratios and perform extremely well. So the first one that we can talk about is VOO. This is the one that I have most of my money actually invested in. So let's take a look. So in the proc summary, we can see that this one invests in stocks in the S&P 500 index, which is basically 500 of the largest US companies. And its goal is to track this index's return. And definitely one great thing about S&P 500 index funds is that there's a lot of potential for high growth. These are 500 of the best performing companies in the US. So if the US economy does well, then your ETF will also do well. The ticker symbol is VOO.IV, and the expense ratio, which I think is one of the most important things to look at, is 0.03%. Now that's extremely low, at least compared to many other expense ratios of other ETFs like this. And in the long term, that's going to save you a ton of money in fees. As far as risk potential, this one is listed as a 4 out of 5. And as you can see, in the last year, this one has grown about 15%, which is basically the same thing as the S&P 500 index benchmark. So if you want to take a look at the portfolio composition, you can take a look at that here. And it also says, 509 stocks, Total net assets is $596.7 billion. And some of the largest holdings are Apple, Microsoft, Amazon, Alphabet. That makes a lot of sense. Let's take another one that I really like, and this is VOOG. This is the S&P 500 Growth ETF. So this is quite similar to VOO, except that this one is a little bit more catered to growth. According to Vanguard, it's in the large growth category, and the ticker symbol is VOOG.IV. Now, this one has a higher expense ratio at 0.1%. That's over 3 times higher than VOO, but if you compare it to other ETFs that track the same index, this is actually still very, very low. And Vanguard rates this as a 4 out of 5, even though I do think this is more risky than VOO, just simply because it has far less companies actually in it. And you can see that according to Vanguard, they have 279 different stocks in this ETF. The types of companies in this ETF, it's going to be very similar to VOO, at least the top ones. So you have Apple, Microsoft, Amazon. And yeah, if you want to see the actual portfolio composition, you can check that out right here. And another one that I recommend for beginners is to check out VTI. This is Vanguard's Total Stock Market ETF. So let's click on that. Basically, this one includes even more stocks than VOO or VOOG. So it is more diversified, and I do believe it is a bit safer. This one tracks the performance of the CRSP US Total Market Index. So it will have large, medium, and small cap companies in it. Over the last year, this one has also grown about 15%, and you can see that this one is a lot bigger than any of the other ones we talked about. This one has 3,525 different stocks in it, with total net assets of $974.2 billion. The 10 largest holdings, it's going to be the same as the others. We have Apple, Microsoft, Amazon, Alphabet, etc. But this one's going to include a lot of small portions and holdings of many other different companies. So that, you guys, is my beginner's guide to setting up your Vanguard account, funding your account, and then actually using that money to buy ETFs. Now, really, once you get that money into your actual account, you can buy whatever you want. You can buy individual stocks, you can buy bonds, you can buy ETFs. It's up to you. I just really recommend buying these ETFs just because of the extremely low expense ratios and the fact that it is a diversified investment, which is quite safe. Index funds like these have made so many people into millionaires, and it's definitely something that you can replicate over the next 20, 30, 40 years. I encourage you, if you have not yet opened up a Roth IRA, definitely consider doing that, especially if you have some money to invest and you want to become a guaranteed millionaire by the time you retire. The best thing about Roth IRAs is that you can pull out that money tax-free when you retire. And trust me, that is going to save you a lot of money. So I hope you guys found this video helpful. Vanguard is one of those companies that everyone uses. It's one of the most reliable investment platforms out there. It's also one of the easiest accounts that you can open, so that's just why I recommend Vanguard so much. If you found this video helpful, make sure to share it with a friend, and also hit that like and subscribe button if you want to see more videos just like this. I make a ton of content about personal finance, investing, and entrepreneurship. Basically, my goal is to help you guys become millionaires in the next 5 to 10 years. So thank you so much again for your time, and I'll see you in the next video. Peace.